I guess it started from trying to figure out why currencies and commodities that I was trading were accelerating, right? As a very young kid at a desk seat, trading, whether it was dollar yen, dollar Swiss, dollar mark yen, or anything, you would notice that, the markets would be quiet in a consolidative phase, and then all of a sudden something would happen and they'd start trending. And for me, it was going back and learning, oh, wait, how come, this fund came in and bought all these Swiss francs here, and now all of a sudden the Swiss franc is trending, and you'd go back and look and see that they bought it through a set of moving averages. So that was my introduction to, okay, so what do these moving averages mean? And then, you go back and you lay them over the charts and you're like, wow, these sort of, whether it's a self-fulfilling prophecy or it really works, securities trade into their moving averages and then begin trending again. So once you learn that sort of thing, you say, okay, there's a little method to this madness that I can start attaching myself to and labeling securities as either trending or consolidating, and it sort of helps me anticipate price moves. When you see something that's trending and trending and trending, and all of a sudden, one of the other pictures in that trade picture starts lining up the other way, you say, okay, well, this is a downward sloping trend line. That's one of my favorite basic tools. And say, okay, well, now we're trailing down this trend line, and now all of a sudden we started consolidating. What happens if we break the trend line to the upside? And sure enough, that's where all of the CTAs that have been short start covering, and you start tapping into where the momentum trades. So that's really how I've stepped into it, and that's how I work it. And I'm a nuts and bolts technician, like from day one. And I like trend lines, I like moving averages, I like RSI and stochastics, and I keep it that simple.
Yeah.